But look, let's start the program with inflation. In the UK was this week tipped the peak at 14%. In America, more than 10%. This is driving up prices and interest rates and threatening an economic downturn.
Now, this rise in energy prices has exacerbated the fall in real incomes and so led to another significant deterioration in the outlook for activity in the UK and in the rest of Europe. GDP growth in the UK has slowed and the economy is now forecast to enter recession later this year.
Well, here on Friday, the Reserve Bank said inflation will this year peak at 7.8%, then start to fall. But here's the surprise. Despite everything you're hearing, inflation right now is most likely going down, not up. That's why the outlook for interest rate rises has been tempered and why stock markets have rallied in recent weeks. Edward Boyd goes in search of those price falls.
In May this year, wheat prices peaked at $1,272 a bushel. Now it's $786 a bushel. In other words, 38% cheaper. The price of corn in May was $813 a bushel. Now it's $606. That's down 25%. And oil in March was $120 a barrel. Today, it's around $89. That's down 26%. And all of that equals deflation, not the inflation that we're all getting used to.
We've certainly seen some weakness emerging across a lot of commodity markets through July, and that's across soft and hard commodities. But of course, you've got to then take into consideration what does that actually mean. I mean, for a lot of these commodities, they are coming off near record levels or record levels, so it's off a high base.
Which means that just as supermarkets and retailers are getting customers used to the idea of higher prices, everybody might have to change tack again. The UN Food and Agriculture Organization says global food prices peaked in March, a few weeks after Russia invaded Ukraine. And this week, the sight of the first Ukraine shipment of wheat gives hope the inflation crisis will eventually abate.
In this context is when the war in Ukraine happens. And what this means is that the situation is exacerbated even more. Why? Because Ukraine and Russian Federation represent around 30% of the exports of cereals.
The most recent food price data from the Food and Agriculture Organization shows June was the third straight month of price declines. Vegetable oils, cereals and sugar decreased in price, while dairy and meat prices jumped. Here in Australia, though, East Coast floods destroyed crops and reduced the supply of fruit and vegetables.
Beans, iceberg, sweet corn, strawberries, basil, some of the real high lines at the moment.
But as the floods ease, more crops are being planted and the supply is starting to return.
Yeah, we're expecting a decrease on some of those lines as it warms up and are planted as well.
The floods have also saturated the land, improving growing conditions, resulting in animal feed regrowing in paddocks.
From what I've heard, because of the floods, it has impacted a little bit, but the fact that now those areas that were in drought have received their water intake, so now the animals will be held back, they'll be able to produce more. So I think within the next 12 months we'll see an influx of a lot of produce, therefore prices will start to come down.
Inflation in Australia jumped to 6.1% in the year to June. Both Treasury and the Reserve Bank expected to peak at nearly 8% by December. Fuel prices jumped 32.1% in the past year, while the cost of building new dwellings was up 20.3%. Vegetables increased 7.3%, and fruit prices jumped 3.7%. But with oil now below $90 a barrel, building materials like timber coming off in price, and the growing season improving in Australia, our economy is also seeing signs of deflation.
You look at across the key agricultural commodity markets, there's certainly been weakness right through July. And in fact, a lot of the price gains that we saw when the Ukraine war started, we saw a lot of those price gains have actually been eroded. But again, it comes back to the simple point that even with those correction in prices, they are still very high food prices that are in the system. And it's going to take a sustained period of lower commodity prices before it starts to feed through to consumer.
Select Fresh Providores supplies fruit and vegetables for cruise ships, and Stephen's customers have been adapting their orders depending on the price.
They obviously are concerned. They're looking for alternatives for a lot of their lines. I mean, they've got other things have gone up for them, such as their insurances, fuel, tolls especially. So they're looking at other lines that they can leverage off to supplement with their meals.
Stephen's team buy fruit and veg every day of the week, and he says the prices change constantly.
Daily, basically. We can get a box of tomatoes at 49, and the next day they could be 70. It just depends on what happens in the market and what everyone's buying at the time.
Ratings agency Fitch says grain prices for wheat, corn, rice and soybeans have all fallen across the world. Fitch says daily commodity price trends suggest the FAO's food price index will fall again in July. The big shift with grain has been Ukraine restarting its exports.
Yeah, so the war in Ukraine clearly created a supply shock for food and energy because of how important that region is in terms of supplying the global market. And certainly there's been some positive signs with the opening up of trade, and that will certainly help. But it's about, the sustainability of that trade flow and how long that lasts and what that sort of means for the broader global market balance. But it's certainly a step in the right direction.
John Collis is the director of A&S Select Meats, a butcher in the Sydney suburb of Mascot, established in 1968. He says inflation is causing customers to be a bit tighter with their spending.
The impact that I've seen is that people still need to eat, so they're still going to be conscious of the fact that they have to eat, but they're also looking for value for money, and obviously they've cut back a bit, but they're still, as I said, they still have families to feed, and mouths to feed, I should say, so yeah.
John says certain products, like pork, have become more popular with customers due to its value.
Good value at the moment is our pork. It seems to have sustained its price and not risen too high. So we've got quite a bit of pork on display at the moment, and we're a lot cheaper than most.
While pork has kept its value, other items like beef and lamb have jumped.
Look, beef has gone up a little bit. Now we're starting to see it come back a fair bit. So it's sustained. It's high. It's very high, but it's still coming back. Rump steak, T-bone, your popular cuts, New York sirloin. They're all very popular, and we're obviously half price to most, all grass-fed meat. And lamb has also sustained its price, and very, very competitive prices.
While inflation is expected to peak in December, there are already signs that parts of the CPI basket are coming down in price, and consumers are tweaking their spending habits accordingly.
There's clearly some early signs that consumers are trading down and looking to tighten their belts, but the full impact really won't be known until, over the next 12 months. And of course, that'll mean different things to different food categories, but trading down can clearly, obviously mean, consumers are on the hunt for bulk buys. They look, they look to the private label offerings. They maybe look to, shop at discounters a bit more versus the traditional retailers. So there's all those sorts of trading down behaviours that we'll be watching, but we don't really know the impact just yet because we haven't yet passed sort of peak inflation.